Yo, yo, what's up, everybody? You already know. Crypto Street
Already know.
Podcast. Crypto Street Podcast. This is Dale. For those that don't know, we will probably have a lot of inside jokes that we're gonna say. Maybe, maybe not. I don't know. But the crew was out in San Diego this past weekend, so we took in some rays, had some beers, some hoot skis, had an interesting night. Prince, why don't we start with you? How's it going, bud? How you feeling from Saturday night?
I'm fine. I'm living. I'm living. I don't know why. What was so big that went down there? I don't know.
Care to share with the audience how your Saturday night went?
Oh, I had a great time. I had a lot of fun.
We all know you had a great time.
I don't know what to say, fellas. Open bar.
Dance.
It'll get you. It'll get you, right?
Let me set this up. Let me interject myself. When we're walking to this club Saturday night, we were walking and we're like, okay, we're not going to stay out that late because Prince and I both flew out early Sunday morning. And then we get like a block from this club and Prince goes, the only problem I see is if they have an open bar. And I was just, like, yeah, whatever. That's not going to happen. But we get there. Prince buys some drinks, goes up and orders them. And I'm standing right behind him to help him carry. And the lady's like, he's, 3 rum and cokes. So she does it up. He pulls out some cash and she looks at him and goes, oh, no, it's open bar. His head turns to me with his eyes wide open. Like one of his shit coins just did 100x in a matter of seconds.
When you get those words, you already know. You already know. You can't go to an open bar event and not get a little out of hand at times.
We talked about it's impossible. You literally cannot. Unless you drink 0, you're gonna drink 10. Because
it's pretty bad.
Those rum and cokes, they just keep a coming.
It was bad. It was fun. It was a lot of fun, and San Diego is the best.
Oh man, love it.
Maybe the best city.
So,
really, it's amazing.
The only possible city that I think of that ranks next to or close to San Diego is Charleston, South Carolina. I know neither one of you have been there. I don't think.
No.
But it's beautiful. It's great. So, Killer, how's it going on your end?
Good, man. It was good to be away. Good to be back. Chilling. Looking forward to this episode with our boy Ledger Status here.
Yeah. Ledger Status is joining us tonight. If we're going to kind of skip the normal routine, he was back on episode 41, which was March 18th, which is crazy to think, Ledger.
Yeah, it's freaking me out. I actually looked it up earlier to see how long it had been.
Didn't feel like when I looked at it too, I thought it said 1 month ago, and I was like, what? No,
it was a while back, but I will say it was right before we found some volatility. So over the few weeks after I was on, it was a nice little run for altcoins. Before we get started, I have a couple of bones to pick. One, Prince, I'm disappointed in your lack of discipline at an open bar, considering your discipline as a trader.
Yeah.
And Dale, the one thing that makes Charleston not even come close to San Diego is humidity. San Diego is perfect weather 360 days of the year, and I want to go back.
It's gorgeous.
Yeah, we asked when we were there. We asked some like a local, or like, does it ever rain here? And they said they like looked at us like we just asked if, something. I'm trying to think of something that they surprise them, but I'm trying not to upset somebody.
Yeah.
It's just room temperature all the time.
Yeah, it's beautiful. No humidity. We sat on this dock, like this pier one night at the end, and like the sunset. Not to sound all soft. I guess.
I want tears.
Again, like trying to trying to tread this line.
We're walking by, right? And we got to go through this, like, I don't know. It's like they had the gates open and maybe they just forgot to close them or something. But we're like, it's wide open. There's nobody here. We're just going to walk over the dock. And then, as we're walking, we see some signs like Homeland Security Garage. It's like, oh, okay, where are we? Like, where are we going right now, guys? But it ended up being wicked. Had some guys kind of
cool
spying on us, probably making sure we weren't up to any mischief, which we weren't. So,
which we never would be.
No.
That's ridiculous.
All right, Ledger. Let's. I guarantee someone's gonna, when we release this episode, someone's gonna say, "Too much like The View." First 5 minutes, shut it off. That's what we got last time. We had a great conversation. Yeah.
How do they know?
I don't even know The View.
What are they doing at like 10 a.m.?
All right, so let's dive right into crypto talk. What as a guy that's very skilled in TA, etc. Let's talk about what some things that you're seeing.
Sure. I'm 99% uploaded on a market analysis video right now that I recorded earlier today.
Nice.
And the main takeaway that I have right now that I'll share is just that volatility is basically at all-time lows on the 3-day chart for sure. Yeah. Very close on the daily chart and getting close even on the weekly chart. And to get to all-time low volatility on a weekly chart, you really have to have sustained nothingness. And what's fascinating, and I think we've seen some of this, is there came a time where everybody was like, well, alts just bleed and bleed and bleed. You can trade margin on Bitcoin and have better risk return. And then, of course, as soon as that became like consensus and volume was peaking on margin traded Bitcoin, that started to disappear. And people got bored enough and were having to use high enough leverage and all that kind of stuff to where now you've seen a little money flow back into alts and you've seen some volatility start to pick up in altcoins while Bitcoin continues to compress. And it's just like a spring right now. And it may last longer. I said in the video that I was recording, I thought that it would have been, the move would have happened a month ago. I'm pretty surprised that it still hasn't happened. It could take until December or later, but we are going to have a return of volatility and we're going to have a big move off of this. Mm-hmm. The big question, the amount of money depends on how much you're putting at risk on that bet. But the big question is whether that move will be up or down. Mm-hmm. And I know a lot of smart people in this market, and I can confidently say no one has any idea.
No one has a clue.
All you can do is either have the right risk set up now, like before the move, so that you are willing to make the bet to get in now and then stop out if you're wrong, or you wait until the move presents itself and you prepare to jump along for the ride and hope that you don't get faked out. Mm-hmm. My gut tells me that once the move occurs, we're going to get tossed all over the freaking place before it goes the true direction. So I actually think that you'll probably be able to give yourself maybe even up to like a week before the real trajectory is determined, because I could see some nasty stuff, and playing that correctly is going to require intense low time frame discipline. So it's going to be fun. We just don't know when. Yeah, and until then, it's crazy boring.
Yeah. Well, and you can pretty much guarantee if you're trading on MEX that it will be overloaded when it finally does move.
Oh, man. Good luck.
In my opinion, that's what's creating what will end up being the move. Yeah. Because you need a catalyst. And right now, while we're recording this, the new daily that's only a couple of hours old has moved like 1%, and that's like woohoo! Like there's a move happening.
People are getting excited.
So people are trading with higher leverage, with higher dollar amounts, and if they get stuck on the wrong side of a rapid move that is outside the bounds of normalcy, that will help create the catalyst that starts the volatility move, the high volatility move. And we just have to wait for whatever that is. And I imagine it'll include a fundamental catalyst that pushes the market one way or the other. We just don't know yet.
Oh, it's going to be disgusting on MEX when it happens.
Yeah.
Oh, God.
If you got MEX
Hopefully
liquidation notices on, just turn them off. Like,
Yep.
Can we?
I have a list on
Well,
Twitter that I call Wrecked, and it's got the BitMEX Wrecked account and like the Alts Wrecked account. It's great. So I just go there. I don't have to look at anything else.
I think you added me to that list too.
Maybe as a joke at one point.
Did you guys see Tone Vays saying that MEX has allegedly banned his account for suspicion of being a U.S. account? And he was saying that he has referred 900 users and it accounts for half of his income referral fees do.
Must be nice.
Wow.
Just living off that referral money.
I'm like kind of surprised though, because a lot of people like pretty openly use MEX while pretty openly being located in the U.S. And I'm very surprised we haven't seen this yet. I wonder if this is a domino.
It was funny. There was actually somebody who tweeted directly at MEX, at Tone Vays, saying like, "Hey MEX, this guy's from the U.S. Why don't you ban his account?"
I saw that.
And then his account gets banned a few days later. So it's like, oh my God, like that really sucks. Like I don't know. Yeah, that's terrible. You know, it's shitty. But what, you know, are you really surprised though? I guess like, you know, yeah, sure. We haven't really seen a lot of this happening for people in the U.S., but it's pretty clear in the, you know, terms of service and all that stuff that you're not supposed to be in the U.S. So, you know, he was kind of making a big deal about it because he's always traveling. But it's like, you know, it doesn't make a difference, man. Like, you know, you're from the U.S. So yeah, I thought it was kind of it was a little ridiculous. Like, you know, to me, it was just like, what do you expect, right? But
yeah, the risk reward for. Go ahead.
Oh, go ahead.
I was just gonna say the risk reward for using BitMEX with significant size as an American is not very good for a variety of reasons. But I think Tone probably has a larger target on his back than most people if he's brazenly trading on an exchange like that. I will say there is an exchange where you can trade with margin as an American, and if they would do a better job of being a good exchange, they would actually be able to take a good bit of American volume. That exchange is cracking. This isn't to overly endorse them or anything, but you know, you can trade with margin as an American. It's a thing.
It's too bad they don't do a better job, because that was actually, I remember when I first started getting into crypto and margin, Kraken was the first exchange I actually used for that.
Yeah.
I don't think it's updated at all since I got in and first
started.
They
bought CryptoWatch. So you can trade with CryptoWatch. Their main interface is a complete disaster. But anyway, so that, yeah, there are other places you can trade. And my personal opinion is people should trade where they have jurisdiction to do so, and be careful otherwise.
Mm-hmm.
Yeah, I think it's either you or Bully or both of you who have been saying a lot lately, like, I think MEX is the next big exchange to go down. We've seen a few of them roll over for KYC or get hacked or something happen to exchanges. And I was always like, oh no, MEX will be fine. Like, it's kind of seems like the Teflon Don of all the different exchanges. Like, nothing sticks to it. They have this plausible deniability where they quote unquote don't allow US users, wink wink. And up till now, that's been good enough. What do you think, odds-wise, of like MEX facing regulation or something?
I want to note that was not me.
Okay.
Actually, I think they're okay. They pretty clearly, at least upon registration, they make their rules clear. Yeah. I think that they may self-regulate some, and it looks like maybe that's what they're doing now. There are other exchanges, I guess, like OKX and stuff, where if they ever catch you on an IP that's not within their jurisdiction, then they'll lock you down in an instant, make you KYC in order to move forward. And the safest bet is to assume that that's what a place like BitMEX would do as well. So people just need to be careful. It's possible that they could come under regulatory scrutiny, but I think that they understand the potential risks, and they've probably got some pretty good lawyers on their side helping them out to make sure that they're at least doing the bare minimum. And there's a huge difference. They only accept Bitcoin as deposits. And you're trading against a synthetic dollar when you trade on BitMEX. And that makes a huge deal in terms of what the regulatory scrutiny will be toward you. So I think that's a big part of it. I think they'll be around for a long time. I do think there's a massive open window for making margin and derivative products available to an American audience.
Yeah, absolutely. I think honestly, with the regulations thing, like, I think, we've seen now IDEX is kind of coming out where they're going to be doing KYC. We've seen the Ether Delta thing go down. So I think it's kind of just in the cards where, things are getting a little more serious now for exchanges, no matter what. And yeah, like you said, like, I don't know if we'll see ever something that's like a public, like, the SEC is going after BitMEX or something like that. But I wouldn't be surprised if there's been talks, back and forth between them going on. And like you said, like, BitMEX, they're not stupid, and they got a lot of good resources. So I think they'll probably try to handle it in-house as much as possible, right?
Yeah, and the American regulators, their job, they are technically obligated to look after the consumer. So they don't want to take a position that's going to be so drastic to overly harm a consumer.
Yeah.
So I think if they are working with exchanges on something like that, they would probably try to offer a soft touch and create some kind of way for a better resolution. And I think they're going after low-hanging fruit. Like, that's what we've seen with the likes of Ether Delta. And even with that, they took a pretty, a softer stance than they could have. They could have threw the book at a guy like that.
Absolutely.
We got a question from the chat I wanted to ask you. Ask everybody, but start with Ledger. Serious question. Bitcoin has held 6,500 for 8 months now. Altcoin winter is definitely a thing. So in your opinions, will Bitcoin drop further as usual after December?
I have so many.
I don't, it's like, it's one of these things, right? It's like, okay, who the hell really knows, right? This is, you're just picking a side. Personally, the side I'm on, I think after December and all that, I think it's going to be going higher. But, personally, I'd rather things go higher, right? So I don't know. That's where I'm at. I have some like small money bets and all that too on the market going higher, into the new year and stuff like that. So that's the side I'm on. There you go.
Yeah, there's Q4 seasonality. That was our big quasi meme. We've got like 9 years of history, and maybe 5 of those with any real seriousness. 2 of those were massive bubbles. So now you've got 3 years that you're really relying on. It's just not a good sample size for seasonality. I don't think it's a bad idea. I think it's a real thing. Like, I think last year was a real thing of raising awareness on the Thanksgiving table pump. And crypto's small enough for that to matter. Yeah. I don't know that the conversation this Thanksgiving will be the same. How many people are going to go to their Thanksgiving table and tell their family, like, I know you bought last year, but this is the year that you should really buy. Yeah. You're down 50% or 75% or whatever. But now you should double down. I don't think that turkey conversation is going to go very well. I think that I would take exception to some of what he said there. Altcoin winter is definitely a thing. He says, I say we still have like 1,500 cryptocurrencies. I was just talking to some friends about the idea of what are called zombie bonds. So this is an idea in a traditional market where companies can issue corporate debt in the form of bonds. And once that company is basically a poop sandwich, people who identify these bonds can identify the fact that that's never coming back. That is dead, but it's walking. So it's a zombie bond. We have zombie coins, and we're going to have more zombie coins, but they're fitting into the market cap. So some of those may not die off, but they may be included in the market cap, and it's just complicated to figure out like what the true market cap is. I'd really love to see what like a top 100 active projects index looks like year over year.
That's a good point. Yeah, I've never even really thought of this too much, but that is, and I think this whole like the zombie coin thing, if we want to call it that, like, because that's not new either. Like, I think you're right from the beginning. We still, coins that have been around forever that are like that, and like Doge pretty much, right? Like they don't do anything and it's just dead.
And some people make new coins all the time, and that's their business model.
Yeah.
But I'd like to see an index like that and how that index fits within like a Bitcoin dominance ratio. And I would use that more than anything else in terms of trying to determine where the alts sit. In terms of the overall altcoin market cap versus Bitcoin market cap, you could say there's kind of some strength there, but really you might as well just use Ethereum as your proxy for that. And Ethereum is net neutral at best right now. We don't know. It looks so much like it could go either way. The measured move on the USD chart for Ethereum that I did, if it breaks down, looks like it's around $125, which nobody owning Ethereum wants to hear.
No one wants to hear that.
Yeah, but people not owning it would like to hear that.
People not owning it would. So we'll find buyers at in between levels, but that would be the measured move of kind of the height of that pennant that USD or ETH USD is forming, with an upside target if it breaks up maybe like 350. I think there is some reason to think there could be like an alt season type of thing. There's better reason to think that Bitcoin would break up, alt BTC ratios would actually go down while their USD values float or stay sideways. That would be more bullish.
Yeah.
So being in altcoins is a risky proposition right now, which I don't think very many people want to hear, but I do think it's a risky proposition. That said, I think there's room to trade them. I would advocate people to be careful.
Yeah, it's the environment, right? We have, this low Bitcoin volatility environment is, it's a beautiful thing when it comes to trading altcoins, in their Bitcoin values. But when,
I would just,
like you said, when it picks up, though,
that's right.
Story, right?
That's right. As soon as the Bitcoin volatility increases, that's when you want to be careful with those altcoin ratios, in my opinion.
Yeah,
I don't remember what else was part of his question.
I think you guys pretty much nailed it. I mean, well, the way I understood the question was, will we see alts do well when Bitcoin is not this winter? And I don't think that's likely. I think most of the time when alts do well, Bitcoin is doing pretty well too, in my experience at least.
Their correlation is very positive right now. I do think that the negative correlation will return with volatility. So the correlation became more and more positive as volatility went down. As volatility goes up, I think the correlation will become more and more negative. For instance, if Bitcoin nosedives and ends up down $3,000 or $4,000 and then bases there again, that's kind of your mirror of the 2013, 2014 market. We'd be taking the pattern that we're going to have a similar bear market to that, except like 3 times longer, based on not actually having the bottom fall out yet. Whereas in that bear market, the bottom had already fallen out and we're just chilling in the accumulation range. That would indicate that we actually haven't gotten to the accumulation range yet, which would be truly brutal. And I think in that scenario, alts would also decorrelate, but your USD values would be totally gone, like toast. But you would find some inverse correlations there, and some alt BTC opportunities.
Something I've been curious about, Ledger. So as Dale was saying earlier, the last time you were on the show was March 18th. Bitcoin was around, let's say, 11,000 or so at that time. How has your trading style changed over that time? Is there anything notable you can think about that you added or removed in the past, say, 6 months or so?
Sure. There's a lot there. It's been a long time. With regard to trading crypto, one would be I've been trading a lot more traditional markets, because as that volatility has gone down, it's been tough with the positive correlation, because if you're trading an altcoin, you've just been trading Bitcoin, but hyped a little bit, and the fundamental catalysts haven't really been giving us very much. So a fundamental catalyst really doesn't give you a pump or sometimes even a dump. when we did have a little more volatility, I think one of the mistakes that I made, I want to be upfront in that regard, was I was looking for a positive move beyond when we hit that 9,800 zone. I thought we were getting a bigger fake out at that time. And one of the biggest mistakes I've made in crypto was not stepping back enough off of 9,800, which was so we went to 11.8, if everybody remembers, then we went way back down to 6, and then we went up to like 9,800. And I was looking for more than that 9,800. I was looking for a move back up to truly touch back into that 10 to 11.8K range. And I missed that. And what I screwed up was not fixing that error quick enough on the way back down. And I actually had my largest Bitcoin relative drawdown on that drop, much more so than the drop from 19 or the drop from 11.8, which was a weird thing. But what that really taught me was just how much it's important to maintain your risk management principles, because you're not just losing, an asset relative to the dollar. You're losing an asset relative to the dollar, relative to Bitcoin. And if your altcoins are getting crushed and you're essentially trading an alt on that exact same setup, and then the setup is wrong, you're losing considerably more. Yeah. So I got beat up pretty bad off 9,800 relative to the dollar, and I really should have avoided that and maintained my risk profile a little better. So I've been working on how do I maintain my crypto relative risk profile.
It's always something, I don't think, there's obviously a lot of guys who are very good traders and they think about it a lot, but, when you first come in the space, it's not really something you're too aware of, is kind of, realizing, okay, well, you're trading, if you're trading alts and stuff, you're almost going against, you got two separate pairings that you got to be watching in a sense, right? Like you want to be watching Bitcoin pairing and the USD chart. And like you said, when it starts losing, your loss is increasing exponentially more than if you were just in one pairing alone, right? So
and I can't get away from this conversation without recommending a book. And this is not about crypto. This is about market cycles. And Ray Dalio is the founder of the world's most successful and largest hedge fund, Bridgewater. And if you go to principles.com, he has two books. One's called Principles, which is a great book that's just his story. The one that I think is extremely important for our current market beyond crypto, but also I think it helps explain some of what we've seen in crypto. And it's on large debt cycles. So it's a book about market cycles and how fundamental catalysts in economies create bubbles and then bursting of bubbles. And we've been in that in crypto. And I think you can read that, learn a ton about markets, what drives markets, all about central banks and currencies. And I think you can translate some of that to what we see in crypto as well. One being the unwind process can take a really long time, especially when you don't have responsible central bankers pulling levers. A lot of Bitcoin people just like super cringed when I talked about central bankers pulling levers, because people talk about true money and not printing money and whatever. But you may have some further on consequences from quantitative easing and tightening and whatnot. But in the process of contraction, so like if you think of the Great Depression, the Great Recession, you're talking about economic contraction. And that's what we had in crypto as well. And what happens there is everything just dies. Like it just dies. And we don't have, because it's cryptocurrency and there's not someone pulling the levers to, bail people out and whatnot. And what you run into is this problem where it's going to take even longer. The pain is going to be harder. The contraction is going to be more intense. And that's what we're in the midst of. And to expect that to just turn around on a dime is a high expectation. Nevertheless, you're going to learn a ton reading that book. Like it was so good.
Things about it, yeah.
What'd you say the name was of it?
It's Big Debt Cycles. But if you go to principles.com, it's a free book. You can download the PDF for free, which is maybe the scariest part about it. Ray Dalio has made a ton of money, and he knows everyone in the world. And he was like, this book just needs to be in the world. So it's like he's got some fears. He's got some fears about global economies, obviously.
Well, yeah, rightfully so.
Yeah,
there's a really cool video version of it too. It's like I think it's like 30 minutes long, called "How the Economic Machine Works," and it's a lot of the same information if you're reading a verse, but it's fascinating.
If you're reading a verse, but I really would recommend reading. It's great. He gives in-depth examples of both inflationary and deflationary depressions, and also like archetypal models. Sorry. And yeah, it's so good. He's my man crush right now in a big way.
I go through phases too, where Dalio's my man crush. It's just, he's a genius. Right? He's a really smart guy, and what he's done is so damn impressive.
Yeah, his fund makes a lot of money, that's for sure. And he created a lot of algorithmic models to play these. And I think if you make the comparison, you might be able to treat. I'm over leveraging my comparison here, but you could possibly treat like the altcoin market like an emerging economy where your debt is denominated in an alternative currency. So like you could treat like altcoins like they're denominated in or like that's your foreign currency denominated in Bitcoin, and you're 2 degrees off of mainland, and that way when things go down, it's like doubly bad, like what I was talking about getting stuck in earlier, and you got to figure out a way out of that, and it can be painful and it could take a long time. And what we've seen, some altcoins, they lose like 80% of their Bitcoin relative value. Bitcoin goes down 75%. All of a sudden you're down 95% plus of your USD value. And that's really bad for the market. It takes a long time for sentiment to come around to bring new money into that environment. And we don't know when that's going to happen.
Well, it's just like you talked about, like the Thanksgiving story is different this year than it was last year, and when the story is everybody's telling everybody about crypto, then it's like easy to see where the money is, but I really think we're just in the midst of a period where we have to like bore the market absolutely to death. And it's been very boring, but I still think it could be flat for a while longer to reach that sort of like maximum apathy and pain. And I guess maximum pain would be another dip. So that's a slightly different conversation, but
yeah, and that dip would be nasty. I mean, if we lose 6K with momentum, it's going to be an ugly one.
Yeah,
like my conservative target would be like 4,800.
Yeah,
but it could get nasty. Some people think 3K. I kind of think 3K is a meme. I think if we don't stop at like 45 to 4,800, I think it could get well below 3K if we really bleed, like for years.
Yeah,
but I feel bad saying that. I don't really think
I was gonna say you're scaring people.
You got to take this stuff a week at a time. Trade your time frames that you have the ability to. One of the things I've been learning recently is a lot of people, they're not as degenerate as some of us and stare at charts too much. Like they really only have time to look at charts with consistency once a week. And when you need to trade a time frame that works for you, set your positioning, set your risk reward, stop out if that's what's required. Like if you lose 5%, that's okay. Like even if it sweeps your stop and then goes up and you missed that, you're trading to survive, to catch the move when you're right. And you just need to add up your right calls with whatever your risk reward ratio is, and let that fit your scenario. And you may not maximize your gains relative to like whoever does the best in a raging bull market, but you're gonna capture a profit. You're gonna do so conservatively, where you manage your potential losses. And in a market where you really don't know what's going to happen next, and especially like right now where we're seeing the whole market wind up so tight, I think that's a better approach, personally.
Yeah, that's the thing. It's wound up so tight, a move is coming. Play it smart, be safe, right? Make sure you got a game plan. I think that's the biggest thing, is have a game plan set up, because if you're just going at it blind, when the situation does arise, if it's against you, you're going to be standing there feeling pretty lost. It's just like, what do I do? And then that's when, bad decisions get made and, all that stuff. So, have a plan. both sides, both scenarios.
I know we're getting. Go ahead.
I was gonna say, you mentioned the word survival. I think that's like the optimal word, because too often people see trading as like swing for the fences. I got to make a ton of money, but by just being there in the space, you know, you're gonna have some success over a long enough period of time. I think, as long as you don't kill everything and blow it up.
Mm-hmm.
Yeah, absolutely. And I know that we're close to the end. I just have to ask you guys if y'all are paying attention to the regular market, with a caveat. The regular market, if you look at the S&P 500, has been like something like 3 times more volatile than Bitcoin.
It's been nuts lately, yeah.
Yeah.
It's been wild.
And I think it's been interesting to watch. I'm curious if y'all have thoughts on it, or if you've really paid attention. Like, are you looking at your 401k or your active trading account? If you have it, how are you approaching the market?
It's definitely changed. I mean, I think just starting, it was probably like 3 or 4 weeks ago, we had that really volatile period start, of which we're still in the midst of, I think. I mean, today I want to say the Dow was down, or the S&P was down like, you know, a few percentage points or something. The Dow was down like 500 points. It's been very rocky. And I mean, I don't know, equity markets have been going up for quite some time. And for them to experience a downturn would not be abnormal. This sort of feels like maybe the precursor to something bigger, just because it's been so much more volatile than it had been. So that's kind of what where my stance is. I don't know if we go up or down, but it feels different.
See, I've been watching the U.S. dollar quite a bit, and there's a lot of strength right now with it, right? So I know, like myself,
those Canadian dollars are
exactly right. Myself, society with Canadian dollars, which they ain't looking too sharp against the U.S. right now. So, you know, one of the things I've been doing is, you know, I'll move some of the cash in. I'll just put it into U.S. dollars right now, because to me it makes a lot more sense holding USD than it does holding Canadian dollars.
That's right.
And aside from that too, you know, I think that, you know, the last few months of just kind of slowly buying up more gold. You know, stocks I don't really play much, but I know even gold, right, with a strong U.S. dollar, it kind of, you know, it counteracts it, right? And so it's not all that great for it. So, but I don't know, you know, legacy markets, it's not necessarily my thing, right? It's not like I'm active in them. It's not like I watch them every day, compared to how I'm watching Bitcoin every day, right? So, but yeah, just kind of stacking up some US dollars over CAD, and then just slowly, you know, I've just been buying up gold.
Yeah.
I don't like with you, Prince, I don't trade my stock portfolio or really check it on a daily basis. Usually it's once every other day. So pretty much I bought some stuff that I'm just going to kind of ride out, I think, and kind of roll with it from there. So a little different than my strategy with crypto.
Crypto's so crazy though, right? Like it is insane right now, because the traditional markets have been a lot more action, really, relative.
So much.
Which is nuts to say, because for so long, you know, this is like what brought me over to crypto was just the action, right? Like there's so much, you know, the volatility was insane. And now I think for the first time in my life, it's like, oh, okay, so equities, how about them equity markets?
How about those uranium stocks and weed stocks?
Man.
Yeah.
Talking about cyclical markets. But yeah, I think one of the things that I've been feeling too is that there's just a lot of additional products that you can trade, right? So like you can trade options, you can trade futures if you want, you can trade regular markets, but also the correlations vary all over the place. And when volatility is high, like at a year like 2018, and what I think we'll continue to see in 2019, I think it's pretty fun. And I would actually say for people that have survived a crypto bear market and the insanity that exists there, I think you need to temper your expectations maybe. But I think you can learn skills in crypto because the market cycles are really fast. I think you can learn things, and you can put your emotions and your psychology through a test that if you survive it, it actually equips you fairly well for the traditional market. And I've noticed following a lot more people in that world, like some of them are going to get so rocked, you know, like they're just not ready. Like there's too much complacency. There's so much faith in the system that the returns next year will be positive, or the the dip will be bought. There won't be a liquidity issue.
They've proven, that when things get bad, someone will step in, right? They've shown that. So, and I think that's kind of still the general assumption is, wow,
Well, rates are rising though. I mean, the interest rates have not been accommodative, or not as accommodative as they've been. It's been interesting to see the battle between the Fed and Trump saying, "Oh, they're raising the rates way too quickly," and this is after periods of historically low rates for years. So, Ledger, you're pretty bullish or bearish on the markets, correct? The equity markets.
Yeah, I mean, I think there are potential sectors of strength. I'm still trying to maintain like spot positions and some stuff. So you mentioned uranium. It's because I've tried to shill pretty much everyone I know into at least some exposure to that world.
It's a good play.
And thank you for that.
I've been doing a lot of digging on that, and I'm going to be building a position.
Well, it can get drawn down with the market too.
Fundamentally, though, and to me, I'm looking at it more on a fundamental side, and I do.
Yeah, fundamentally, it's a sector that has been beaten up for 11 years. So talk about studying a bear market cycle and seeing what can happen. I think a crypto person, like if you're looking at things like what's the cost of mining and therefore how does that support the price of Bitcoin, the uranium market has been operating at like 25% plus below cost for years.
They've just way too much.
So it's truly survival of the fittest, and like who can last the longest to wait for the spot price to go up. But the spot uranium price has been going up, and it's actually getting close to that kind of break-even production point. And that's why it's been interesting to me as a sector play. But with the broader market, I mean, I didn't trade much in turn. Like you didn't have to. Like you just put your money in every month or whatever you do, and you let it ride. And I was pretty tech heavy for a while and just played growth stocks for years. And I didn't, even in 2015, 2016, didn't do a whole lot. And we could be in another 2015, 2016. This could be like a fantastic bear trap right now. My personal belief, though, is that we're not in a full market cycle breakdown. Like we're not going to have another 08. But there's such a thing as a bear market or even a recession that doesn't end up being like a global financial crisis, and
like a cyclical bear within a secular bull. I think.
That's right. And I think there's a lot that we can learn from this market. I think that a lot of crypto traders have been put through the paces, and they might be able to play this market with some success. And there's good products out there to trade. So I'll just encourage people to take a look at it. Like, don't run in head first and say, you know what, Facebook's gone from 210 to 140. I'm going to short it to $50 a share. Like that, maybe temper that type of emotion. But look at some charts, try to learn about the market, follow people that are paying active attention to that market, and see what opportunities may present themselves. I think portfolio diversification is generally a good thing. And a lot of people are so strongly into crypto that their entire net worth is completely tied to cryptocurrency. When I like to think of it for myself as a sector.
Yeah, that's exactly it. It's another piece of the portfolio. I think that's
right.
I think that's a more, a better way to look at it, because I've been seeing more and more, even just on Twitter polls where people are still like, what percentage of your money is in crypto, and they'll say, it's like 70-80% plus, and it's like, okay, I get it, because at one point, I was doing that too, but I think, in the long run, I don't know. Yeah, there's a time and a place, right? So
yeah. And currency trading is something some people do really well too. And a lot of people that are good crypto traders would do well trading currencies. Personally, I find my strengths in equities purely because of my knowledge on that side of things is a little better.
Yeah.
But a lot of currencies, they have these macro moves, but then they just have these crazy short-term moves that often will respect TA pretty well. And people can do well in there. And I think there are some sites, friend told me, I think Awanda is one where you can go and you can like debit card $1,000 on there, and it's okay for Americans or anybody. So you can go to gin on something like that if you want to explore other markets. I don't have any. I've never used it, so that's not my recommendation. But like, if you don't have a traditional equities account,
you heard it here first. He's recommending.
Yeah.
Ledger, let's kind of veer off the beaten path here and talk a little bit about the new learning program that you rolled out here, a month or two ago?
Yeah, so I started on October 1st. The first class got going. This is something I put out a simple landing page at the beginning of the year. Then I just kind of let it simmer for a really long time, let the email list get very cold, let us dive into a bear market. And I was like, let's launch this course. Why not? But no, really, I run a micro business myself. So like I needed to make sure, hey, I can run my regular business and I can venture into this new world where I'm spending time on a new adventure. It's a course. It's meant for people that are not looking at this every day. It's meant for people that want to be able to come in, get either a video or a slate of videos, maybe once a week. And it's a multi-month thing where you're learning kind of the essentials of how to look at a market. The current class is about 60 people, and it's just kind of I call it my beta class, where I'm trying to just kind of stay ahead of where we're at and get really high quality stuff recorded for them that is fit into their schedule so that they don't have to sift through crypto Twitter and every YouTube channel in the world and all those things. It's just meant to give you a head start. I tried to price it in a way that is fair for people. Like it's not going to be, I don't want you spending like 10% of your whole portfolio on a course. But yeah, so if you go to ledgerstatus.com/learn, you can learn more about that. And it's something that I'm really excited about. It's course driven. Eventually the whole thing will be created and drip to you over time. But yeah, check it out if you're interested in learning more. It's designed for someone that's got a significant amount of money invested or ready to invest in the market, but they're not looking at this stuff full time.
Mm-hmm. Perfect. Yeah, so check it out. I think
actually go to ledgerstatus.com/street.
There we go.
Yeah, there we go. Ledgerstatus.com/street. So kind of wraps everything up that we have for you tonight. Again, everyone likes to know when we're recording. This was on November 12th, Monday evening. Happy Veterans Day to everybody that is a veteran. It's kind of all we have. Any final words, Ledger?
Thanks for having me on, guys. It's been fun. And
yeah, it was a good shot.
Kudos to you for braving through this bear market. You know, I've been on a little break with my own podcast, unfortunately, but looking forward to get back to that too.
Sure.
Thank you, man. Yeah. We really appreciate it. I just want to give a real quick shout out to everybody dealing with the wildfires in California. Yeah. It's a horrible event, obviously. You know, many people displaced, many homes destroyed. So for anybody listening from California, we're thinking of you if you're affected, and thoughts and prayers for all the people affected. So
Yep. Echo that. Stay safe. Also, the firefighters fighting that. Pretty dangerous stuff, so just be safe. Thanks, everyone, for listening. Tip your waitress. Hootskis for the boys. You already know. Keep grinding. Paydays will come eventually, I promise. As long as you're not such a prince.
There you go.
All right. Thanks, everyone. Take care. Peace out.